All right, good afternoon. Welcome back here to Trader Money. Great to have you aboard. One thing about having the trade war stuff and Brexit stuff and these big major headlines that get into the market is that it creates some pop, drop, chop, and all of that. When we start to lose that, right, and we lose the trade headlines and that kind of stuff that emerges, we go into these types of periods like right back here or right over here or like kind of what we're in right now. Just the slow motion, few things going up, few things going down, just not a lot of real significant, game changing type of moves on day to day basis. Not a lot of big, massive pullbacks, to be dip buyer of or big rips to be short of. Just very small, tiny oscillations, right? And, that's what we're seeing in the market for the most part, obviously with earnings season and everything else. We have some of that happening, but from a market standpoint, we don't see any of that happening. We don't see the metrics changing or anything else like that. Now, for the challenge, have two positions on the board. Have Micron, which opened up and rallied this morning. My apologies here; I'll type correctly, and then faded here with the rest of tech, and it's kind of been sitting around this 48.20, 48.30 level all day. Down about 43 cents right here. Netflix opened up, was down about a little over $4 at one point. His rally back has turned green here. Neither of them making a significant move here with it. If we look at the option values, and these were the option values 5 minutes ago, but so they probably changed. Micron probably is $1.80 and Netflix probably $9 or something like that. But nothing too significant there. Nothing coming close to price targets or anything like that. Now Micron has lost a little bit more than probably it should, right? Based on a little bit of implied volatility. But we also got out of it yesterday, or the option that we had yesterday, at a little bit of better price. So it wasn't like we got out of something and rotated into something where we were going to get a different effect. No, we're getting the same, and so we got a little better price on the exit of the 6 contracts, and maybe a little overpaid for the 8 contracts, and overall wash and offset. But the bottom line is, we basically just trimmed the position, as dictated by the challenge here. So nothing to change there. We do have a new entry trigger on the board here this afternoon, and that is Oracle. Oracle is triggering bullish here, and you can see the fresh 3-7 crossover. You see the Stoke 39.1 pushing above 50, fresh push above the 50. Again, that's not priced into the algorithm, but it is a visual piece that we kind of display some of the stuff the algorithm takes a look at, moving above its 20-day moving average. Just a very nice setup here, on Oracle. And, even in a day where some of tech has been weak, we've seen tech pretty much lag the market here today off of Google's earnings. And then one thing with Oracle, you don't really have to worry about earnings. They had them September 12th, so they're still 6-8 weeks away, in regards to their earnings. We have some downside crossovers. One of the signals we saw yesterday, for the challenge, or a bullish signal, was Home Depot. We see that pulling back a little bit here today. Nothing too significant, and nothing that's changing. Nothing that's changing the signal from yesterday at this point. But anyway, those are kind of where the things for the challenge, lie right here. And so, not going to make any adjustments, and we'll run into the close with Netflix again, Micron. All right. Earnings season. One of the things that'll happen when we get kind of devoid of fresh macro news, and it'll even happen when we have a lot of macro news. You get these headlines that talk, the big bearish catalyst is coming, or the big bullish catalyst is coming. These hyperbole type of things. And we saw some of that here this morning, and I apologize, my browser's a little slow right here. I'm seeing if it's still on the front page of Market Watch. Oh, no, now they have an opposite one. The signals are loud and clear. A new bull market is underway, strategist says. This morning it was a bear market catalyst is lying in wait for stocks, warns UBS, right? And so we always have, those types of things, and they're meant to drive readers, right? Now, the bearish one from this morning, I found it to be interesting because what they were saying wasn't wrong, right? It wasn't incorrect. It just wasn't all that correct either. And the gist of the argument went like this. And it said, hey, when the market goes through earnings declines, right, which is what the market's in right now, it's seeing an earnings decline. When it goes through that, that's when we've had the big, massive pullbacks. And they're absolutely correct. When we've had earnings declines, we've seen some of the bigger pullbacks in the market. Historically, 100 years. But what they forget to mention is that we see earnings pullbacks that happen in the midst of the upward ticks, right? That creates some consolidation. Not every earnings pullback turns into a financial crisis or a dot-com bubble breaking, right? So it's one of those things where as we look at earnings season, at this earnings season, right, you have to kind of go, okay, we're seeing some earnings pullback. Does this mean the market's, ready to fall off a cliff? And the reality is, right, if you go sell stocks because of earnings pullback, where are you going to put the money? Right? Where are you going to put the money? Market's still in that conundrum. It didn't have that conundrum back here in 2000 and 2007, 2008. Back here, it was, you go buy bonds. Duh. That's easy. You don't have that option right now. Bonds don't pay. The central banks essentially over the last 10 years have killed bonds, right? Just absolutely killed bonds in terms of a, investment, long-term investment type of rotational asset there. So you don't have that. So investors are going to be willing to put up with a little bit more, in terms of, trade war scare, an earnings pullback and whatnot. But one thing to keep in mind, while we have an earnings pullback happening, there are two numbers I want to show you. First number is that the technology sector has seen the largest increase in earnings since September 30th. Now, you say, well, September 30th, that was 29 days away, right? Well, you take a look at where things were a month ago and the estimate for the earnings growth, minus 4%. And it's coming in as a decline of minus 3.7. Now, market's a second derivative world, right? It's not getting worse at an accelerated rate. In fact, the worsening is declining, right? Which, okay. You basically, what do you have? You have a car that's been, putting on the brakes. And you know what? It's about to, it's slowing down. But there's some sign that maybe it's going to, not have to keep braking anymore. And what does that mean? Well, maybe it can now start to accelerate, right? And investors are going to kind of read stuff like that into it. And so you have that element where, from an earnings standpoint, the earnings decline is not as big as what was expected earlier this month for this earnings season. Okay, so that's a big number. The other big number here is the fact that earnings are declining, but revenues are growing. Now, it is a low mark in revenue. It's a pretty low mark. We're not talking about monster revenue growth here. Okay, 5-year average revenue growth is 3.5%, and it's coming in at 2.8. But we're seeing the earnings decline with revenue growth, and that is something where. You look at Amazon and you look at a lot of the other companies out there. What have they started to do? They've started to put money into themselves, not by buying shares, which everybody was all up in arms about years ago. Over the last 4 or 5 years, they've put money into investing in themselves, which is very interesting. It is very interesting to see. Those are the two numbers I want to show you. Right. And two numbers that I think put investors in a position where they have to look at the earnings pullback and go, this is short term, this is temporary, unless there's a major catalyst on hand. The other thing, when we look at the aggregate numbers, right? When we look at the aggregate numbers, we have to take into account the energy sector and how bad the energy sector is. The energy sector is dragging these numbers down in a big way, right? They are hurting the averages. They're hurting the averages on revenues. They're hurting the averages on earnings. And you know what? The energy sector just has kind of become its own thing. It's not something that we look at investors really kind of pricing into the aggregate of the entire market. What does get priced in more than that? Well, tech. And, as goes tech, so go the markets, right? As go the financials, so go the markets. We've always heard those things. But anyway, that's kind of where this earnings season is and what it's going to end up looking like by the end of this season. And we have about 40% of companies that have reported, about 45% after today, and the aggregate numbers are in, and they're really not going to change all that much. And we will see individual stocks be affected and whatnot, but market knows what the earnings are, and now what's the market going to be doing? It's going to be looking for signs of what's going to be next quarter's earnings season, right? What does the data look like? If the data improves a little bit on the back of this earnings season, market's not going to be able to buy fast enough. If we continue to see data erosion, the market's going to take a pause, and rightfully so. And I think that's kind of the next step here, for things overall. Now, we do see the metrics. What are they doing? Well, the metrics are still, squarely in the bulls' favor. We see the bullish percent index just pretty much going up each and every day. We see, the number of stocks above 7-day moving averages still in a nice spot. We see, the small cap versus large cap, ratios still in a great spot. Is this the time that small caps finally break out? Small caps have hit this level 1, 2, 3, 4, 5 times. This is now the 6th time this year. Is this the time they finally break out? I wouldn't be surprised to see it because it is coming off a higher low. But, is that going to happen today, tomorrow, into next week? It might happen here in about a week and a half when we start to see a lot of the small cap earnings, come out into play. The beginning of earnings season, it's almost always large cap driven. And then the small caps, kind of take over at the end of earnings season. All right. So anyway, that's where things sit. Here in the here with the market, and market vibe still sitting at 7 here today. So no real massive change there. And so going into the close here today for the challenge, holding Micron and NFLX, and we'll kind of see what things bring as the end of the month draws here, and as we get into the beginning of a new month, and a lot of economic data, here on tap. Thanks for hopping on. Have yourselves a fantastic day, and we will talk to you tomorrow. Take care.